In this video, traders, we are going to look at what makes a great trader, in my opinion. Stay tuned. Hey guys, warm welcome to you. So these are my thoughts on what makes a great trader, coming from observing some really great traders, researching some great traders, and just knowing from myself and my own journey what's really helped me improve as a trader as I progress through the years of my trading career. So let's have a go and let's see. And if you want to add any, guys, please feel free to in the comment section below. And while you're down there, check out our channel sponsor. There's links to those in the description below. Okay, so first one is calm under pressure. Pretty obvious, but you get a lot of pressure with trading. People think this is an easy thing, and you go with the flow. But there's times when if you have that drawdown, or times when you're just not hitting the right things, or maybe you want to be trading but the market's very quiet, or other things. There's always some kind of pressure that is being applied to a trader in some way or the other, whether it's intra-trade or whether you're waiting for a trade, like I say. And so the ability to be calm and say, listen, this is not worth, if I start to get concerned about this, if I start to get angry or frustrated, then it's going to be a problem with my decision making. And it's not to say that traders don't get angry or frustrated, we'll look at those in a moment, but it's still having the ability to stay calm more than most, especially when you're swinging around a big size. The average person off the street, if intraday they were moving up and down 10 grand, 20 grand, 30 grand, they're going to be screaming with joy and crying in despair. But a trader recognizes that whatever level they're at, and that number doesn't matter, guys, by the way, if that's £200 or the rest £200,000, it's all kind of related to the account size you're trading, or you're backed by someone, or whatever it may be. But the point is, a trader recognizes that that one trade's almost irrelevant. It's the outcome of multiple trades and where they are at the end of the quarter that matters. So yes, maybe they've made 20 grand today, but perhaps they lose 10 tomorrow. Perhaps they lose 5 the next day, then they make 2, and then it averages out to X. So I think it's that calmness under pressure that's very, very important. And number 2, guys, is the ability to observe emotions and act as needed. This is a really big one, and one of the key points is that they're very self-aware. The myth of traders trading like robots, having no emotion, is nonsense. Yes, your emotions get dampened down with experience, just like any other thing out there. Human beings become less sensitive to stuff when they're exposed to it. Analogy could be soldiers in war, in battle, live ammunition the first day is probably going to make you pretty scared. And of course all the training tries to help you with that, but probably when you've got bullets whistling past your ear, you're not going to be happy about it. But after you've been there for a while, it becomes normal. Same with racing a car. The first time you do it, you might be like, oh, this is quick. Then you get used to the speed, especially if you've got a quick vehicle. All these kind of things. So it's adapting and recognizing. But going back to the point, being very self-aware. So saying, listen, I'm getting angry at this market now. I'm getting angry at my trading. I'm getting frustrated. I'm getting disappointed, and recognizing it and then taking action. Acting as needed is the key, because that's the final step. Is that it's not just necessarily saying I'm getting angry at this, oh, well, I'll carry on trading. No, it's doing the thing you need to do to prevent that affecting your trading. So it's being self-aware of your emotions. Every great trader has that ability to observe the emotions and act accordingly. So if it does get too much for them, they step back or they do something different. I think it's humble enough to know when to trade. I think there's a kind of arrogance to new traders. Guys, I've been there myself. You think you can trade everything. You're like, yeah, I can trade that, I can trade this, I can trade that, trade that. And it is arrogance, because ultimately great traders are humble enough to know, hey, I'm not that good at that, but I'm very good at this. So if I stay in this and I do this very well, there's enough money in that stream to make it very worthwhile. I don't have to be trading every single market, every single strategy, every single thing. Humble enough to recognize that I'm not that good at all these things. This is what I'm good at. This is what I'm going to focus on. The next one, guys, is risk seeking, but also strong at preserving capital. The best traders know when to push the throttle down. They know when to really put the chips in, but they also know when to go into preservation mode and go, hey, things aren't right for me. Let's back off. Let's keep the capital. Let's push the throttle when things are right. Let's pull back when they're not right. can adapt quickly. So pretty self-explanatory. Market conditions change, trader changes. A good trader, you recognize, doesn't try to keep doing the same thing when it's not working. They can either change and do something else or wait until conditions change again. Objective. So objective when they're analyzing themselves and the market. Something that I see a lot of newer traders struggling with, the objectivity of not only analysing the market and not having with a really firm bias and not seeing it for what it's supposed to be. Talk about more of that later on in a second. But objective to their performance, objective to what they're doing. Sometimes they are too hard on themselves, or they swing to the other side and give themselves a free pass for stuff they're doing wrong and don't hold themselves accountable. But being objective is like, okay, well, I've done this well, I've done this poorly, I could improve on that, I could do better with that, that's really good, etc. The other way is confident but not cocky. So the confidence is a confidence in my ability to produce returns, but not cocky enough to think that I can go in every day and just make what I want. It's like, okay, I know that if I stick to the plan and I adapt and I recognize the conditions and I apply my method, then over time it's going to work out. And if it doesn't, I know that any drawdown will be recovered. And I think many traders, when they get to that point, then it becomes a little bit easier to go through the drawdowns. It becomes a little bit easier to go through challenging times and not so elated when they're having good times. Whereas a cocky trader, you see it quite often, guys who kind of start out, make a little bit of progress. They have a couple of good days and they think they're sort of a superhero. And you can recognize the kind of naivety and the greenness of the trader as someone who's very, very celebratory of a good month or a good couple of days, because we know that over time that's not always going to be like that, and you have to have those because that's the job. Over time it's going to work itself out in the wash. Enjoy the market, self-explanatory. I don't think any great trader out there doesn't actually enjoy the markets and love what they do. It's probably the same for any profession, isn't it? I'm not focused on being right. So yeah, they don't care about being right. It's about protecting capital and making money. It's not about, I said that this stock was going to go higher or lower, aren't I great, like the analysts might do on TV. It's completely different. It's about producing returns, simple as that. Right or wrong doesn't come into it. And the final thing is see the markets differently. I genuinely believe that each trader sees the markets through their own lens. Know that I've tried to put that lens across for me, and it's worked really, really well for me. The way that I approach the market, and I look at the market and I see that in supply and demand and in the price action kind of view, when that happens, and that's not for everybody, it definitely helps a lot of people. Maybe some people try a different way of looking at stuff, but when you look at the market in your own lens and through your own approach, it means that things become clearer. You, instead of looking at numbers on a screen and trying to decipher these numbers and these candles, you're looking at it from a perspective of, a people, of institutions, of retail, of panic, of greed, of fear, of supply and demand. And that's how I approach things. And, I know a lot of people do the same. A lot of very successful traders definitely do the same kind of thing. But also some traders look at things slightly differently. But the common theme through all of that is that everyone has their own way of looking at the market. And if they do that, then they have the confidence and all these other things kind of fit into place. So add yours in the comment section below, guys. What do you think makes a great trader? And I'll see you in the next one. Take care. Keep your risk managed. Goodbye.